بسم الله الرحمن الرحيم، والصلاة والسلام على أشرف المرسلين سيدنا محمد عليه أفضل الصلاة وأزكى التسليم. السلام عليكم ورحمة الله تعالى وبركاته. مرحبا بكم في هذا الفيديو الخاص بتقديم درس بنك مانجمنت من طرف الأستاذ عائشة محمد، أستاذ مساعد با بقسم العلوم الاقتصادية بكلية العلوم الاقتصادية جامعة الوادي. Banks as a financial institution play a pivotal role in providing capital for funding economic activities in all market economies. So, banks, according to the principal function of financial intermediation, represent a strong link between those who have surplus funds and those who are in need of funds. This issue leads us to ask a lot of questions, such as, what's a bank? How does it work? What are its functions? By the end of this course, it's aimed at students recognize the banking regulatory framework, understand the essential management practices of the commercial bank, master the main terms related to the banking management, be able to analyze the relationship between interest rates, profitability, and liquidity. Be able to write short paragraphs speaking about the bank's management issues. Definition of a bank. Bank is an organization where individuals and businesses can keep, invest, or borrow money. Also, exchange currencies. Types of banks. In general, there are two types of banks, which are commercial banks or retail banks. They receive deposits, offer loans, and manage clients' portfolios. Investment banks, providing financial advices, raising companies, capital and security underwriting, merger and acquisition processes, where banks advise buyers and sellers how to evaluate business transactions negotiation, as well as organizing and implementing these processes. The main functions of the commercial banks. The main function of the commercial banks are divided into two types, primary and secondary functions. Primary functions include accepting deposits and granting loans and advances. Banks accept deposits in three ways. Current accounts. These accounts allows customers to withdraw money without restrictions, but they do not offer any interest. Savings deposits. The bank accepts small deposits from households or persons in order to encourage savings in the economy. These accounts pay interest. Also, we have time deposits. The bank accepts deposits for a fixed time. It pays high interest but sets restrictions on when customers can withdraw his money. Granting loans and advances. Loans include various term loans, long, intermediate, and short term. Overdrafts. The overdraft allows the account holder to continue withdrawing money even when the account has no funds in it. Also, we have the cash credit. It's a short-term financing solution a business customer has at his disposal. The secondary functions include purchasing and discounting of bills, issuing debit and credit cards, Debit card, almost customers have a debit card, allowing them make withdrawals and other transactions at a cash dispenser. A credit card, it's a card which can be used for buying goods and services as well as for borrowing money. Also, there are other services that are made by the commercial bank as an agent to its customers as the following: collecting bills, draft, checks, etc., paying the insurance premium, rent, loan installments, working as a representative of a customer for purchasing or redeeming securities, etc., in the stock exchange. In addition to the mentioned functions, commercial banks are distinguished by the process of credit creation. What is the process of credit creation and how does it work? Credit creation, it is the process through which banks increase the amount of deposits in the system by lending out money to borrowers. The mass of money in circulation is created through this process. Basically, when a bank makes a loan, it concurrently creates a matching deposit in the borrower's bank account, thereby creating new money. How is the credit created by a bank calculated? The formula used in calculating credit created is CC equal ID times M, where M equal 1 divided by R, where CC is the credit created, ID is the initial deposit, M is the credit multiplier, where R is the reserve requirement. Sometimes people prefer to hold cash rather than deposits, so that the multiple deposit creation process becomes less. So the equation becomes CC equal ID times M, where M equal, in this case, 1 divided by R plus L, where L equal or means the leakage rate. Activity. In this activity, we are going to calculate the credit multiplier and the created credit according to the following conditions. We have the period 1, or the first period. We have initial deposit $2,000. We have required reserve rate equal 10%. We have the leakage rate equal 3%. The solution, multiplier equal 1 divided by R plus L, M equal 1 divided by 0.1 plus 0.03 equal 1 divided by 0.13 equal 7.7. So the multiplier equal 7.7. CC equal ID times M. So CC equal 2000 times 7.7 equal $15,400. Through their functions and processes, commercial banks play a crucial role in promoting economic stability and growth. Their ability to manage deposits, offer credit, and provide various financial services highlights their significance within the financial system. Acting as financial intermediaries, commercial banks not only enable transactions, but also boost economic development by supplying vital financial resources to individuals and businesses. Thanks for attention.